Namaste students, welcome back to accountancy class. In the previous class I have started with the introductions of accounting. I have informed what is accounting and we have also studied certain heads like summarizing, recording, classifying, interpreting, analyzing, all that. What is that? About that we have studied, and also objectives and the advantages we have finished. In today's class, let us see the disadvantages of accounting. See, there is not only advantages like we prepare an accounts where we keep a record, all that is there. Apart from that, there is also disadvantages in accounting. What is that disadvantage? See, first one, only the monetary transactions are recorded and non-monetary items are ignored. Like monetary transaction, purchased goods, sold goods, rupees this much, a certain amount, okay, that is recorded. Like non-monetary items, like which is measured in terms of money are recorded, which is not measured in terms of money are not recorded. For example, retired person, a person got retired, a person came to the business. If a person is not well, something like that, that and all we will not record. That is non-monetary, which cannot be measured in terms of money, are not recorded. So accounts, this is why we call disadvantage, because we tell that accountancy gives all the detail but only the monetary detail, non-monetary details cannot be taken from the accountancy. Okay, does not provide the timely information, because after the transaction is done, like after purchase, sale, everything is done, later on we apply, we write it, okay, we make a transaction and the final we prepare at the end of the year. That is why when we want today, see what is going on in our business today, what is going on, we will not come to know, we will not get to know what is our financial position today, because we prepare at the end of the year, financial statement is prepared. That is why it does not provide the timely information. Okay, on time we will not get information because we need to prepare. It takes time. At the end we will get to know the transaction position of the business. Next, accounting figures can be manipulated. Manipulated means corrected. See, for example, that is why many frauds and all will take place in most of the companies or the business. We will keep reading it in the newspaper. See, for example, if in the business 1 lakh transaction has taken place, a person can manipulate, can change slowly, okay, can change. In the place of 1 lakh, he may write 1,10,000 and collect the money. That is why manipulate means he can change, interchange the money. In the place of 1 lakh, he may erase 10 and he may write only 10,000. All the chances are there. That is why the accounting figures can be manipulated, okay, can be changed. Next, give only an approximate information. What is approximate information? For example, 256.5 or 0.7, okay, 266.7. So it will not give exact amount. See, we will not write in this form in the accounts. We will write approximately. It can be written as 257. So that paisa also matters in accountancy. But that information we will not give it. So exact information we will not. We give a approximate amount. This kind of approximate amount we will give. That is why that paisa or the very less amount, it might be 1 rupee, 2 rupee, chances are there to change. So it does not it gives an only approximate information. Next, it records the historical event. As I told, it does not provide the information timely, because we record everything past, what happened. Present, later on we write. That is why it does not give the present information. It gives the historical information, which will not be very useful at the time. That at that time we want what is going on now, but we will get the information about the future or the about the past. We will not get the information about the future. What has to be done, that will be taken. It takes little time to get the information. That is why this is one of the disadvantages. Next, we will move on to accounting meaning. Okay, see, in the previous class I have already informed what is accounting. We know that it is nothing but accounting. We start with the identifying, measuring, recording, classifying, summarizing, interpreting the result, analyzing and interpreting the result, and communicating with the result in order to know the financial position. There is one more definition given by according to American Accounting Association. Association. American Accounting Association, which is nothing but AAA. It is also given a definition about the accounting. Let us just see here. Accounting is defined as a process of identifying, similar to that, like identifying in the previous class I have told, identifying means whether it is a what kind of transaction, business transaction or any other transaction. We need to identify. So identifying, measuring, we measure in terms of the money and communicating of economic information to permit informed judgment and decisions by the uses of information. It is similar to the meaning of accounting what previous class we have studied, same meaning, but this is given in the form of definition under the AAA, where we record, we identify, we measure and finally communicate the information to permit the judgment which will help us to take the decision making, that is called as accounting. Okay, accounting. Next we have accounting process. Okay, how the accounting process will be? Start with the accounting process will start with the communicating accounting information. Okay, what information is required? It goes like a cycle. Then based on that we take a decision related to the economic event. Economic event, which is a transaction which are measured in terms of money. Okay, which are measured in terms of money are recorded here. This is about the accounting process. This will be just asking to draw the. They may ask us to draw the accounting process. Next, let us see basic terms. Okay, very important in this chapter is basic terms of accounting. Okay, basic terms means there are certain terms which you have not come across, you have not studied anywhere. Some of the extra terms we will see, for example, what is debtor, what is creditors, what is asset, liability, which you have not studied previously. Now certain items I will write it here. Later on you will come across those kind of terms in future. Most of the time it will be repeated in the textbook. Okay, in the textbook. So you need not know, you need not worry what is this, what is that, because those items everything will be covered here. First of all, first item is entity. Entity is nothing but identification of the business. Identification. Okay, identification. Entity is nothing but identifying the business, which is different from its owner. Owner as well as the business, it is not same. Okay, they are different from each other. That is why identifying. See, for example, we identify a bazaar or shop or more shop or super bazaar or hypermarket, where we identify the business in the name. It is called as entity. Entity is nothing but it is the identification of the business. It is called as entity. Next we have transaction. Transactions. What is transaction? Transaction is nothing but it might be an exchange, okay, which involves two parties. For example, Mr. A and B. Okay, A and B. Purchase. A purchased the goods from the B. What happened? Transaction took place. That is called transaction. Where one purchasing, one is selling. It is called as transaction. Transaction where one person buys and another person sells it. It is called as transaction. In the under transaction, there are two types. You can write it. Transaction is nothing but it is an exchange. Okay, exchanging the transaction. In the transaction, there are two types of transaction. One is cash transaction and one more is credit transaction. Okay, cash transaction and credit transaction. What is cash transaction? Where, see, for example, A and B will be there. A and B will be there. A will purchase from B, purchaser. Okay, A is a purchaser. A is a purchaser. B is a seller. A purchases something from the B, goods from the B. So, B and A is supposed to pay. If he pay immediately, okay, you go to purchase something, you pay the money, then it is called as cash transaction. Okay, then it is called as immediate money, immediate payment, then it is called as cash transaction. So I repeat, transaction is nothing but where the exchange of the goods. For example, you purchase goods, you pay the money. You sell goods, you collect the money. That is a transaction. Okay, transaction. So what is under transaction? There are two types. There is cash transaction as well as a credit transaction. What is cash transaction? Where we pay the immediate cash. You buy the goods and pay the cash immediately. Then it is called as cash transaction. Whereas credit transaction, see, in the accounts or in reality, in business, there is a this kind of facility also where you go to shop, you purchase something, need not pay immediately. In the future days you are paying, then it is called as credit. Okay, you are buying the goods at a credit basis, means you are paying the money in the future days. So there are two types under cash. Under transaction, that is cash transaction and credit transaction. Credit transaction is nothing but future payment. Okay, in the future you are going to pay the money, not immediately. You are going to pay in the future. Future you will pay. You will buy it immediately, but the amount is paid in the future days, not immediately. Then it is called as credit transaction. Okay. Next we have capital. Okay, capital is nothing but a person investing in the business or the owner. Think I am an owner of the business. I will invest a certain amount to a business, newly started business or whatever it is. Together, the money is called as capital. Capital is nothing but it is an investment. You can think that it is an investment what I have made. Okay, capital is having one formula. A is equal to L minus C. A is equal to L minus C, which means capital. C is nothing but capital. A is nothing but assets. And L is nothing but liability. Okay? Am I clear? See, I will repeat from here. Entity is nothing but identification. We identify. There is one name. Person name. See, for example, I have name. My name. Identifying my name. Calling. It is called as entity. Or identification is identification. Name is different. Business is different. We cannot. It is not similar. Right? It is separated. Owners as well as business is separated. Next we have the transaction. Transaction is nothing but where the exchange of something between the two parties. Correct? Where two parties should be there. One has to buy, another has to pay, or one has to sell, another has to collect the money. So there will be two transactions. There are two types of transaction. One is cash transaction and credit transaction. What is cash transaction? It is a transaction where the transaction is done, exchange is done, where the cash payment is done immediately. Then it is called as cash. You purchase something, immediately payment of the cash. Then it is called as cash transaction. Whereas credit transaction means future days we are going to pay, not immediately. Then it is called as credit transaction. Next you have the capital. Capital is nothing but the amount what is invested for the business. As an owner of the business, what he brings to the capital in the form of the money, it will be in the form of the money, or either in the form of cash, or it might be in the form of asset also. Students, a person while coming to the business, he will bring either things he will bring, or else he will bring the cash. Okay. To the business, then it is called as together it is called as capital. Capital is having one formula. A is equal to L plus C, where L minus C, or A is equal to L plus C also can be written, but I have written here C is equal to A minus L. C is nothing, whereas C is nothing but capital, A is an asset, L is a liability. Now let us see what is an asset, what is a liability. Okay. So here these basic terms can also which is required for the business. In order to run our business, asset is required. It is a benefit for us. It's not benefit. Which asset? If we invest, we get the income. Okay, with the help of asset, we can earn the income. That is why it is called as an asset. Asset is nothing but it is an economic resources of an enterprise. Enterprise is nothing but business. Okay, the asset is divided into two types. That is fixed assets. Fixed asset and current asset. Fixed asset as well as a current asset. What is fixed asset? Fixed asset is nothing but the asset which is fixed. Name itself is telling fixed for a long period of time. It is called as fixed asset, which cannot be taken. We cannot, move it. It is tangible, which can be seen, but it is cannot be taken every now and then. We cannot purchase every now and then it is called as fixed asset. Current asset is nothing but which comes for a short period of time. Okay, it is an asset but which comes for a short period of time. For example, fixed assets are like land, okay, which is required for the business. With the help of this, we can earn the profit. With the help of the asset, which will help us to get the benefit in the business, that is called as an asset. Okay, so for example, land, or you can write machinery, okay, machinery, or furniture, etc. All this is considered as a fixed asset, which cannot be moved or can be moved, but very rarely, which cannot be purchased daily, which comes for a long period of time. With the help of this, we get the huge benefit to the business. It is called as an asset. So the fixed asset. Next we have the current asset. Current asset is nothing but which comes for a short period of time. See, for example, cash. Okay, cash is a current asset, or it might be stock. Stock is nothing but goods, which cannot be stored for 10 years. Correct? One goods is there for in the business, okay, which cannot be kept for 10 years. Business means every now and then transaction will take place. So every now and then sale will take place. So stock is a current asset. And next we can write the debtors. I'll tell you what is debtor later on. It is also one of the basic terms, students. So debtors, all this is considered as a current asset. So I'll repeat. Asset is one of the basic term. Asset is nothing but it is an economic resources of an enterprises. It's one of the resources of an enterprises. With the help of asset, we can earn the profit, correct? Which gets the benefits to the organization or to the enterprises. It is called as an asset. Asset are of two types. That is fixed asset as well as a current asset. What is fixed asset? Fixed asset, name itself is telling it is an asset fixed for a long period of time. For example, land, furniture, machinery, it is considered as a fixed asset. Whereas current asset is nothing but stock, debtors, or cash, etc. It is considered as a current asset. That is about the A. Okay. So capital is an investment. A is a asset. Now coming to liability. Okay. Fifth one, next concept or the term is liability. Okay, what is liability? Liability is something which we have taken from someone. Okay, we have to give it back. Okay, it is not does not belongs to us. It belongs to someone. See, for example, loan. The loan belongs to me. Money I have got, but I have to return it back. It is not mine. Which is ours, which will go to asset. Okay, which belongs to us is an asset. Which does not belong to us is a liability. So liability is nothing but we are supposed to pay for others. Okay, so that is why it is considered as a bank, loan or a bank overdraft. Okay, overdraft, OD. Overdraft. Bank. What is bank overdraft? Bank overdraft is nothing but money withdrawn. It is also kind of loan, but we are withdrawing more than what is there in the account. See, for example, in my account, bank account, if I have 1 lakh rupees, but for my that I had to pay someone around 1,10,000 rupees. Okay, my bill is 1,10,000 rupees. Now I have a bank amount is 1 lakh rupees. So now what happened? That 10,000 is required. So bank overdraft. Taking more than what is there in the account. Withdrawing more than what is there in the account. I have in my account I said 1 lakh. Taking more than that means 1,10,000. Taking more than that it is called as bank overdraft. This kind of facility is getting only from the businessman, and it is people those who are having the current account will get this kind of facility. So liability is again divided into two types, that is long-term liability and short-term liability. Short-term liability. What is long-term liability? Long-term liability is a liability which we have taken from someone for a long period of time. We keep it and keep paying. It is either it might be loan or this or bank overdraft. It is all considered as a long-term liability. And short-term liability is nothing but current liabilities. Creditors, bills payable is considered as a short-term liability. Next we will move on to other topic. Okay, next concept is goods. Okay, next concept is goods. Goods is nothing but something which kept for sale. Which kept for sale. Okay, or it is something, some product. Okay, or as you can write, it is something, a product which is we are keeping for sale. Okay, that is nothing but goods. So till now I have prepared what and all we have studied, meaning under the American Association, American Accounting Association, then accounting process, and I have started with the concept, basic concepts like entity, which is nothing but identification. Next we have, after entity we have studied the transaction, which is nothing but exchange, whereas we have the two types of transaction, cash transaction as well as a credit transaction. Next we have studied the capital. Under capital we have one formula, C is equal to A minus L. A is nothing but asset. Under asset we have the fixed asset as well as a current asset. Next we have studied L. L is nothing but again liability. Liability are of two types, that is current liability, long-term liability and short-term liability. And the last one, goods. Goods is nothing but something which has a value. Okay, it's a product which has a value. We can sell it. It is a tangible. It is nothing which is tangible, which can be seen and touched. That is called as goods. Okay, it's nothing. In short, it is nothing but a product. Okay. Thank you, students. We'll meet in the next class.